Gold price is weaker this Thursday, with investors taking a sit-and-wait attitude ahead of Friday's non-farm payrolls report. How much impact could the employment data have on the metal? We have Jim Wyckoff, Kitco senior technical analyst, joining us today. Jim, thanks so much for being with us.
Hi, Danielle. Always nice to be with you.
So gold, Jim, seeing some volatility ahead of Friday's jobs report. What do you expect of tomorrow's data, and what kind of move in gold can we expect to see?
Daniela, tomorrow's U.S. jobs data is going to be one of the more important pieces of information ahead of the September FOMC meeting, and it could tilt the Fed's hand on whether it will raise interest rates in September or possibly wait till December or beyond. I think the sense of the marketplace is that this report's going to be a pretty solid report, probably at 200,000 non-farm jobs created in August or above. I think that would then lead the marketplace to believe that the Fed may make a rate hike in September. But of course, we've got this uncertainty in the world marketplace right now with China's stock market in tumult. It could be that before the FOMC meeting takes place in mid-September that we have some serious upset in the world markets that could force the Fed to wait until a later time this year or later.
Right, Jim. So would you say that it's really the report that's been holding gold back this week, or as you mentioned, there's something else at play?
Daniela, I think there's a bigger element at work here for gold, silver, and the entire raw commodity sector, and that's the fact that the sector has been in a major slump. We've seen 6-year lows in silver, in aluminum, copper, and gold is hovering near recent lows. So the entire raw commodity sector has been beaten down pretty hard. As I've mentioned before, this is a major bust cycle in the raw commodity sector, and bust cycles turn into boom cycles sooner than most ever expect. So I think the thing we need to watch is crude oil. Crude oil prices late last week surged strongly. We surged strongly Monday, sold off a little bit Tuesday, but then we came back this week with some rallies. So there are early technical clues that the crude oil market has put in a bottom. If that is the case, that's very good news for the precious metals and the rest of the raw commodity sector, because crude oil is the raw commodity sector leader, and if it bottoms out, the others are likely to follow.
All right, Jim, we're going to take a quick look at silver before we get to your Wyckoff market rating. You said it before, commodities suffering multi-year lows here. Silver is one of them. The metal has bounced back, but how optimistic are you for the metal with prices currently under $15 here?
Well, the technicals, the long-term technicals in silver are bearish. There's no doubt about that. However, if you do look at longer-term price charts, when you get below $15, I suspect that there's certainly more upside potential than downside potential in silver at that price level. And let's put it this way. If silver prices do continue to drop significantly lower, we've got a big problem in the world marketplace. We've probably got deflation as a big worry. So if we do drop silver and the other raw commodity prices to still lower levels, we've got some serious problems in the world economy.
All right, Jim, let's get to your Wyckoff market rating now. What grade are you giving gold and silver this week?
Daniela, for December gold and silver futures, I'm giving gold a Wyckoff market rating of 2.5. I'm giving December silver a Wyckoff market rating of 2. Those are both fully in the bearish camp. Support for December gold is seen at 1100. Got overhead resistance at this week's high of 1147.30. December silver has support at the recent low of 1395. Solid overhead resistance at $15.
Jim, thanks so much for your thoughts today.
Can't wait till next time, Daniela. Bye-bye.
And thank you for watching. We have Gary Wagner and Chart This up next.